Hello and welcome. Right now, there's a potential shockwave getting ready to ripple through the global markets, and believe it or not, it all comes down to a single decision from one of the world's most powerful financial institutions. So let's break down what's really going on. This is the big question on every investor's mind, isn't it? Are we standing on the edge of a massive bull run that could sweep across nearly every asset class you can think of? The energy in the markets right now is absolutely electric. Everyone's waiting for what could be a huge final month of the year. And at the very heart of all this buzz is the U.S. Federal Reserve. The entire market seems to be holding its breath, just waiting for the Fed's next move. It really is a single decision that could change everything. And hey, while we're diving in, please don't forget to subscribe to the channel and turn on notifications so you don't miss our next explainer. And just a quick reminder, this is all for informational purposes and is not investment advice. All right, let's get into the first piece of this puzzle, what everyone's calling the Fed's big pivot. The whole theory here is that the Fed is about to completely reverse its course, and that one single action could set this entire market in motion. This number, well, it says it all, doesn't it? Traders are now pricing in an over 80% probability that the Fed is going to cut interest rates in December. Now, in market terms, that's about as close to a sure thing as you can get. The debate isn't really if they'll cut any more, it's all about when and by how much. And this isn't just market chatter, okay? The heavy hitters are getting on board. As you can see here, a giant like JP Morgan is now officially expecting a 25 basis point cut in December. That's a quarter of a percentage point. When a firm like that makes a call, you better believe the market listens. So why is this one little move such a huge deal? Well, a rate cut basically makes money cheaper. It costs less for everyone to borrow, and this has this massive psychological effect. All of a sudden, the cash sitting in your bank account is earning you less, which makes other assets, like stocks or gold, look way, way more attractive. So let's see how this one decision could literally set off a chain reaction. The very first domino that everyone expects to fall is one of the oldest stores of value on the entire planet. We're talking precious metals. That's right. The word being used by the analysts we're looking at isn't rise or increase. They're using the word explode. What they see is a perfect storm brewing for precious metals, where a Fed rate cut is the final spark that could ignite a massive, massive move upward. And this chart, wow, this shows you exactly why that feeling is so strong. I mean, just look at this performance in only 11 months. Silver, up 135%. Platinum, up 122%. Gold, 93%. You see, investors aren't even waiting for the Fed's permission. They've been piling into these hard assets for months, looking for shelter from something else. And that something else is captured perfectly in this quote. One analyst, Devrim, put it so bluntly, people have been watching their cash literally melts away because of inflation. When the money in your bank is losing its buying power every single day, you start looking for things that can't just be printed out of thin air. But this ripple effect, it doesn't just stop with shiny metals. Oh no. The next domino in the chain is what we call risk assets, and that means stocks and crypto. This is classic market dynamics 101. When interest rates drop, investors' appetite for risk goes way up. They're basically encouraged to pull money out of those safe, low-yield things and put it into assets with higher potential returns. This is what creates a risk-on environment, and historically, that has been a powerful tailwind for both the stock market and crypto. But what's really fascinating here is that while both of these markets tend to go up, they're kind of fueled by different stories. For U.S. stocks, it's pretty straightforward. Cheaper money means companies can borrow, invest, and grow more easily. But for Bitcoin and crypto, it's this dual narrative. On one hand, it's a high-growth tech play. But on the other hand, it's also an explicit bet against the very traditional financial system that the Fed is in charge of. Okay, so let's get into the deeper story. Because according to some of these analysts, what we're watching here isn't just about charts and interest rates. It's about a fundamental and really powerful shift in something much bigger: trust. So the argument goes like this. This big rush into gold, silver, and even Bitcoin, it's not just a trade. It's a vote of no confidence. It's investors looking at the current system of central banking and seemingly endless money creation and deciding, you know what, I want out, or at the very least, they want to hedge against it. This quote here from analyst Hakan Şahan is pretty provocative, and it really captures that deep-seated skepticism. The feeling among some people is that the whole system is rigged, a Ponzi system where the rules are written to make sure the big guys always win. And when that belief really takes hold, people start looking for other places to store their wealth. And this quote from Devrim Akyıl just reinforces that sense of urgency, maybe even danger. He doesn't just say the policies are misguided. He describes them as a program that's leading the economy into a vortex. That kind of language suggests that for some folks, this isn't just about making a profit anymore. It's about financial survival. So with all these dominoes lined up, the market expectation, the flight to hard assets, and this deep psychological shift, what should we really be watching for as this whole story unfolds? Okay, let's put it all together. The key takeaway from these analysts is that the chain reaction is basically set. We're seeing bullish signs across gold, silver, stocks, and crypto. The only thing that's missing is the catalyst, that final decision from the Fed. So while the direction seems pretty clear to them, the exact timing, that's still the one big question mark. So what's the bottom line? Well, the consensus view from the sources we're looking at is that the path of least resistance is up. The conditions seem ripe for a major rally. But, and this is a big but, it is absolutely crucial to remember that with high expectations comes high volatility. These kinds of moves almost never happen in a straight line, so a healthy dose of caution is always a good idea. And all of this leads us to the final, and maybe the most important question. Are we just watching another typical market rally driven by the usual central bank policies? Or are we seeing the early stages of something much, much bigger? A kind of monetary revolution, where people all over the world are rethinking what money even is and where they should store their value? That's the real question to think about as we watch these dominoes fall. Thanks for joining me.